Hello, this is John Piper with the weekend video clip, and it's Saturday the 25th of January. It's also part 2 of this month's Technical Trader. Looking here at a daily chart of FTSE, basically we had the peak in May, we had 5 waves down as discussed. Now quite what we've seen since is a little bit obscure, but I think it's probably a final diagonal type thing. 1, 2, 3, 4, 5. We have which has formed some kind of fifth wave failure. It doesn't quite tie in with the 5 waves down there, and obviously it's a very, very lengthy correction following on from what we saw in May and June. Nevertheless, that seems to be the best count for now. We have got 5 waves up here, which we'll have a look at in a minute in a bit more detail. Didn't quite complete actually, but that's sort of par for the course. But right now I think the peak's actually in, and that we're now going down. So it'll be a question of positioning for that. So let's have a look at the shorter term. Here's the hourly chart. We saw this low on the 16th of December. 1, 2, 3. Fairly extended fourth wave. Then we had a 1, 2. I thought there could be a 4 there, in fact. Fifth wave. Double top. I'll be talking about this 5 wave decline here. So let's have a look at the even shorter term chart. And of course we had expiry last week, so expiry was around here, proed a bit higher, but it's all around expiry, which is a critical time, as I've been saying. This is a 10-minute chart, so expiry came in on the 17th there. We staggered a bit higher, which is what I'm talking about in fact. We then had these 5 waves down there, 1, 2. And this whole thing counts as some kind of third wave. It's been sharp. Exactly where we are is not 100% clear, but that's probably a 1, 2, maybe a 3, 4, 5. I would think we're due a bounce now. Very solid decline yesterday. What we're looking for is this 5 waves down, see the low, see the corrective rally, and then short the rally, which is a typical big call type approach with maybe a extreme stop below the lows. I did suggest putting extreme stop up here in one of my video clips recently. Those of you who've done that should now be positioned nicely into this move. Just to expand on the 10-minute chart slightly, 5 waves down, I sent you a chart of that in my newsletter or in the video, I can't remember which, but one of the two. That's 5 waves down. A big correction, but then we often see that with the first move. I'd say this seems to count as one complete wave down to there. So that may be a 1, 2, 1, 2, then a third of a third. So I suspect if this goes according to plan, that the fastest section of this particular section this particular phase is now behind us. We'll now see a bit of backing filling as waves 4 and 5 come in, and then we'll see the rally which we want to short. Let's have a look at the Dow. Well, a pretty obscure pattern to the upside on the Dow. We take it from here. We have got a 1, 2. Looks like a 3, maybe a 4. Again, maybe a fifth wave failure, but certainly we are going down now. Let's have a look at the wave pattern on the way down. Again, looks like a failure, and that could be the fifth wave failure there. It's difficult to count it precisely, but it could be that one, or even that one, I suppose. We count that as 1, A, B, C, 2. And now we've got a 1, 2, 1, 2, 3, 4, 5. So again, it's a similar pattern to FTSE with more downside expected, backing and filling before we see a rally, with a shorting opportunity coming when that rally is in place. DAX, nice clear pattern. That was the actual all-time high there, in fact, just below 9.8. There's actually just ABC, which is a little bit confusing, but count that as 1 for the time being. 2, various waves down to there, but again, it looks like we've seen the third wave, so fourth and fifth waves to come in. Exactly how far we might go down on Monday remains to be seen. This is the Nikkei Dow, the weekly chart. Had a big down week last week. We're currently 50% long on the Nikkei, having taken 50% profits here, plus 6,000 points or so from the entry point around here. There obviously is a case that if we're going to see a massive fall, the Nikkei will follow. But again, I think for now, I'll just wait and see. I don't know how many of you actually are still holding the position I recommended back in January 2013. It was an intended investment position rather than a trading position, but currently the stop is still below here, which is quite a long way down really. May want to tighten. I would like to tighten that, just depends on what we're seeing. We have now seen you can see the 5 waves here, 2, 3, 4, 5. Now seen a sharper pullback, But again, I think it's probably worth waiting to see how things pan out. I suppose the big worry is a huge rush for the exits. I think the QE thing has created something of a bubble, and there's always a possibility when that happens that a few people start to exit and suddenly there's a mad rush going on. That's not impossible in the current situation. It's probably wouldn't happen at this stage of the game, but you never know for sure. But certainly Japan is also could easily get caught up in a bigger route than we might expect. And look at the T-bond, which is on shooting up with all these troubles going on, which is actually querying this pattern. We had this decline. I thought it would be a correction, but it's not. We're currently short of long-term positions, short of T-bonds, short of Nikkei, sorry, not Nikkei, short of Nasdaq, FTSE, DAX. I want to add to those if we want to get confirmation that a reversal's come in. That's not quite the case yet. I'm also be taking shorter-term positions as well, but T-bonds are now going up. Remains to be seen, but certainly it looks like we might see new highs here now. And this pattern. This is the daily chart. Let's have a look at the weekly chart. Well, the weekly chart does put the whole thing in perspective, really. What we've seen, in fact, is a 5-wave decline. 1, 2, 3, 4, 5. So the little blip up here, which of course looks huge on the daily chart, is actually not of no huge consequence on the weekly chart, with resistance around here, which looks like it could easily be penetrated. But clearly bonds are in a downtrend. But we are due some upside. So that's a 5-wave decline since late 2012. So we can easily see 3 or 4 months of bonds going up as a correction before they go down again. Quite how that might indicate, how that might impact on equities remains to be seen, but that chart's fairly compelling. And gold is rallying. So currently we have an ABC here. We then have an ABC here, which suggests that we might just see a C wave. Even so, it might easily go up to 1500 or thereabouts. So it's worth getting on board. Let's have a look at the shorter term pattern. The wave pattern is not 100% clear. The trend's certainly up, so I think it's a question of you maybe extreme stop, although it wouldn't have worked very well here. Would have worked well here, or buying the dips. If I see an opportunity, I'll let you know. Okay, that's all for today. I found it interesting, useful. Should be an interesting year actually. I think finally got some pretty clear signals. Equity markets seem to have turned, and everything's to play for. Have a great day. Thanks for listening, and bye for now.